Hey guys, Breezy CPA here, your certified AI public accountant. Before we get into the video, make sure to hit the like button. Do it now. You know you're going to like the video. And if you want to see more videos like this in the future, please subscribe. If you're interested in learning more about accounting, taxes, or becoming a CPA, make sure to visit us at breezycpa.com to check out our library of courses. Breezy CPA offers hours of high-quality HD video with searchable scripts that allow you to easily follow along and navigate to your desired point within each lesson. Each course comes with a comprehensive study guide that you can both download and print for easy access on the go. The student dashboard tracks your progress and allows you to easily navigate to each lesson. With a test bank of over 5,000 questions, our patented quiz tracking software helps students identify mistakes and provides detailed solutions and explanations for quick improvements. For a limited time, use promo code BREEZY20 to get 20% off your order. Link in the description box below. Now on to our video. Alright guys, so here we have the 1040 for Chris and Alice Jones, and they are a couple that lives in Los Angeles. They are married and they are filing jointly. They have 4 children, Mark, Annie, Sam, and Phil, and they are going to be reporting their income on the 1040 here. So let's see what figures they are going to be entering into this income section. So starting out on line 1, we have the total amount from Forms W-2, and this line includes all of the wages, salaries, tips, and other compensation from employment as reported on Form W-2. So Chris earned $50,000 and Alice earned $35,000 from their jobs respectively, for a total of $85,000. So their combined W-2 income is fully taxable. This excludes any pre-tax contributions, so this would be any contributions to retirement plans or health plans, or anything that was already deducted from their gross pay. So in the case of Chris and Alice, they had $85,000 of total income on their W-2s, so we would record that right here on line 1A. Next, we have household employee wages not reported on W-2s. So this would be for household employee wages for nannies or caretakers if you hire them. Anything under $2,600 does not require a W-2, but still needs to be reported. So for Chris and Alice, they spent $1,800 for hiring a part-time caretaker for Alice's mother. Since this payment falls below the W-2 threshold, it needs to be reported on the 1040 on line 1B, so they would report $1,800. Next, we have tip income not reported on line 1A, so employees must report all of the tips that they receive. If unreported tips exceed $20 per month, they must be included here. So for Chris and Alex, $600 in cash tips from Alice's part-time catering job. The $600 is taxable since it was not included in Alice's W-2, so she would need to include $600 on line 1C for tips. Next, we have Medicaid waiver payments not reported on Form W-2. So these are certain Medicaid waiver payments that may be non-taxable but still be reported. So for Chris and Alice, neither of them had any of these, so they would report 0 for this on line 1D. Next, we have taxable dependent care benefits on line 1E, and this refers to employer-provided dependent care benefits that were above $5,000. They would be taxable. So Chris and Alice received no dependent care benefits, so they would record 0 for line 1E on the 1040. Next, we have employer-provided adoption benefits. So if your employer provides you with adoption assistance over $16,660, then it is taxable. So for Chris and Alex, their employer provided them $3,000 for benefits for an adoption. The $3,000 is under the exclusion limit, so it is not taxable in the case of Chris and Alice. So on line F, you would enter 0. Next, we have wages from Form 8919. So this includes wages that are not subject to Social Security or Medicare taxes due to incorrect worker classification. So Chris and Alex did not experience worker misclassification issues, so they would report 0 on line 1G. Next, we have other earned income on line 1H, and any other earned income such as non-reported earnings is included here. So Chris and Alice, they had $2,000 from Alice's side gig of art commissioning. So the $2,000 is taxable as earned income on line 1H. So we're going to include $2,000. Next, we have non-taxable combat pay election on line 1I. So eligible service members can elect to include non-taxable combat pay to calculate the earned income tax credit. So neither Chris nor Alice had combat pay, so they would record 0 for that on line 1I. So when we total everything up for lines 1A through 1H for Chris and Alice, we get a total earned income of $89,400, and that gets recorded on line 1Z, so $89,400 for Chris and Alice. Next, we have line 2A, which is tax-exempt interest. So this is tax-exempt municipal bond interest that is reported here, even though it is not taxable. So Chris and Alice had $2,000 from their municipal bond. This amount does not add to their taxable income, but is used for other calculations. So on line 2A here, tax-exempt interest, we are going to enter $2,000 for Chris and Alice. And you can see here, if we look down on line 9, it says add lines 1Z, 2B, 3B, 4B, 5B, so on for total income. So the B lines are what are going to become part of the total income, whereas the A lines are more of just an informational area for other calculations. So on line 2B, we have taxable interest, and this includes taxable interest from your bank accounts, from investments, and from other sources. So for Chris and Alex, they had $500 from a savings account. So the $500 is fully taxable as ordinary income on their 1040. So on line 2B here, they would enter $500 for that taxable interest. Next, we have qualified dividends, and these are on line 3A. So qualified dividends are taxed at capital gains rates, which are 0, 15, or 20%, depending on your income. And Chris and Alice had $1,000 from a qualified stock dividend, so they would enter that on line 3A, $1,000. Next, we have ordinary dividends on line 3B. So total dividends include both qualified and non-qualified dividends. Non-qualified dividends are taxed as ordinary income. So for Chris and Alice, $1,200 in total dividends, including $200 in non-qualified. So the $200 of the total is taxed at ordinary tax rates. So on line 3B, you would include $200. Next, we have IRA distributions on line 4A and 4B. So traditional IRA withdrawals are fully taxable unless a portion represents after-tax contributions. Total distributions from your IRAs must be reported. So Chris withdrew $5,000 from his traditional IRA distribution. Chris's IRA contributions were fully pre-tax, so the entire withdrawal is taxable for Chris. So on line 4A and 4B, he would enter $5,000 on 4A and $5,000 on 4B. Next, we have pensions and annuities on line 5A and 5B. This line includes the total gross amount received from your pensions and or annuities. So Alice receives a monthly pension totaling $24,000 annually. So Alice's pension was funded entirely with pre-tax contributions, making the entire amount taxable. So $24,000 is fully taxable. So we're going to enter that here on line 5A, $24,000, and on line B, $24,000. Next, we have the Social Security benefits on line 6A and 6B. So this line reflects the total Social Security benefits received by both spouses. So Chris receives annual Social Security benefits of $15,000 and Alice receives $10,000 for a combined total Social Security benefit of $25,000. So that would be recorded on line 6A, $25,000, and on line 6B, $25,000. All right, guys, next we have line 7, capital gain or loss, attach Schedule D if required. If not, check here. So we're going to say Chris and Alice did not have any capital gains or losses. So now let's take a look here on line 8. We have additional income from Schedule 1, line 10, and then we have our total income from lines 1Z, 2B, 3B, 3B, all these. So let's take a look at what the additional income from Schedule 1, line 10 was for Chris and Alice. So here is Chris and Alice's Schedule 1, the additional income and adjustments to income. So if we go down here to line 10, we can see here the additional income goes on Form 1040, line 8, and it was $48,700. So we're going to enter that $48,700 here for Chris and Alice. So moving on to line 9, we have our total income calculation. So we're going to need to add line 8 along with all these other lines here up to 1Z, and that is going to give us a total of $192,800 of total income for Chris and Alice for the year. Next, let's move down to line 10, where we have our adjustments to income from Schedule 1 on line 26. So going back to Schedule 1, we looked at the additional income in Part 1. Now we're going to take a look at the adjustments to income in Part 2. And if we go down to line 26, we have our adjustments to income. They go on Form 1040, line 10, $9,453. So we go here and we go back to line 10, $9,453. So to arrive at our adjusted gross income on line 11, it asks us to subtract line 10 from line 9, so the 9,453 from the 192,800, and that is going to give us $183,347 as the adjusted gross income for Chris and Alice. So assuming that Chris and Alice take the standard deduction for married filing jointly for the year, which is $29,200, and they do not have any qualified business income deductions for the year, we would add lines 12 and 13, which would give us $29,200 from their standard deduction. And when we subtract line 14 from line 11, we get $154,147, and this is Chris and Alice's taxable income for the year. All right, guys, so we took a look at the face of the 1040, where Chris and Alice had a total income of $192,800. Now we're going to take a look at the back of the 1040, and we're going to take a look at credits, payments, refunds, and any potential amounts that Chris and Alice might owe. Looking at line 16, we have tax based off of taxable income, and Chris and Alice's taxable income was $192,800, and they also had taxable Social Security of $25,000 combined. So 85% of $25,000 is $21,250, which would be the taxable Social Security benefits. So the total taxable income would be the $192,800 plus $21,250 for a total of $214,050. So of that $214,050, $22,000 is taxed at 10%, so that would be $2,200, $67,000 at 12%, $102,000 at 22%, so on and so forth. So the total tax is going to be $38,152 off of that taxable income of $214,050. So that amount would get recorded here on line 16, $38,152. Next, we have line 17, which is amounts from Schedule 2. Chris and Alice did not have any additional taxes from Schedule 2, so they would enter 0 for line 17. For line 18, we add lines 16 and 17 together, so that's going to give us $38,152. Next, we have line 19, which is child tax credit. So you can get up to $2,000 per child. So assuming Chris and Alice have 2 qualifying children, they can claim up to $2,000 per child. So how do we know if Chris and Alice have qualifying children? We go back up here to dependents, and they have 4 kids, Mark, Annie, Sam, and Phil. And we can see here in box 4, check this box if qualifies for child tax credit. So 2 of their kids, Sam and Phil, qualify for a child tax credit. So the child tax credit begins to phase out for income above $200,000 for married filing jointly. Since their total income of $192,800 falls below this threshold, they can claim the full credit of $2,000 times 2 kids, so $4,000 credit on line 19, 4,000. Next, we have line 20, and these are additional non-refundable credits. Chris and Alice did not have any, so for line 20, we are going to put 0. For line 21, we add lines 19 and 20 together, so that would be the $4,000. And for line 22, we subtract line 21 from line 18, so that would give us a total of $34,152. For line 23, Chris and Alice did not have any other taxes to report from Schedule 2, so that would be 0. And line 24, we add lines 22 and line 23 together, so that would give us $34,152. Next, we have our payment section. So federal income tax withheld on line 25A from Form W-2. Chris and Alice's employers withheld $12,000 in federal taxes, $7,000 for Chris and $5,000 for Alice. So these would need to get reported on line 25A, $12,000. Chris and Alice had no other federal income tax withheld, so on line 25D here, we are going to enter the total of $12,000 for the 3 lines of 25. And on line 26, Chris and Alice had no estimated tax payments, so they're going to enter 0 on line 26. Moving on to line 27, Chris and Alex do not qualify for the earned income credit as their income exceeds the eligibility threshold, so that is going to be a 0 as well. Moving on to line 28, we have the additional child tax credit. So if a child tax credit exceeds their tax liability, they may qualify for a refundable credit. However, since the full $4,000 credit was applied on line 19, no additional refundable credit applies for Chris and Alice, so they would enter a 0 here on line 28. Next, we have the American Opportunity Credit, so this is related to education expenses. Chris and Alice did not have any education expenses, so that would be 0 as well. On line 31, Chris and Alice have no additional refundable credits, so we're going to enter a 0 there as well. So on line 32, we add lines 27 through 31 together, which is going to give us 0 on line 32. And moving on to line 33, we have our total payments. So looking at the total payments, we have $12,000 from line 25D, 0 from line 26, and 0 from line 32 to give us a total of $12,000 as our total payments for the year for Chris and Alice. So now that we have all the information entered on the return, let's see how much Chris and Alice owe for the year. So the amount that they owe would be to subtract line 33 from line 24. So line 33, 12,000 minus the 34,152. That is going to give us $22,152 as the amount that Chris and Alice owe for this year. That is it for this lesson. I will see you guys in the next one. If you found this video helpful, please make sure to give it a thumbs up and subscribe for more content. If you're interested in learning more about accounting, taxes, or becoming a CPA, visit us at breezycpa.com for courses. Thanks for watching, and I'll see you guys in the next one.